Welcome to today's webinar on covering crypto. I'm Matthew Goldberg, member of the Cebu Board of Governors and consumer banking reporter at Bankrate. We have a great moderator and panelists today. Our moderator is Crystal Kim, crypto reporter at Axios. Our panelists are Danny Nelson, managing editor for news at CoinDesk, and Andrew Rummer, executive director for The Block. Links to full biographies are available at cebu.org. If you have a question for the panel, please put it in the Zoom chat. With that, I'll hand things over to Crystal. Crystal?
Hi, everyone. I think it's easy to come up with a theme in hindsight. Last year's was crypto's very bad, no good, horrible year. That's per Brady Dale, my partner in crime and co-writer of the Axios crypto newsletter. It was about covering the bad apples and how they spoiled the rest. Heck, I started a new beat thinking I was going to cover startups and what they're building and ended up effectively a bankruptcy reporter, covering their collapse and the ensuing contagion. Right now, the mood seems dramatically different than the mood circa January 2022, though much of what we were talking about then seems relevant and fresh even now. Today, we have two experts. I know them as I don't know how he does it, Danny Nelson from CoinDesk, as well as the inimitable Andrew Rummer, executive editor at The Block, to give us the skinny on all things crypto. We have enough expertise in this digital room to suss out critical coverage for 2023 and beyond. To start us out with a few opening remarks, Andrew?
Hi there, Crystal. Thanks for that. Yeah, hi, I'm Andrew Rummer. I work for The Block. I'm executive editor to The Block. The Block's newsroom is broadly split in two. So we've got a consumer-facing part of the newsroom and a professional-facing part of the newsroom. And I oversee those pro-facing teams. And it's very exciting for us because we just launched our pro-facing offering like literally this week. It's kind of in the soft launch phase, and then we start singing and shouting about it next week, so I'm sure you'll hear more about that then. What to say? I mean, yes, I totally agree with Crystal. I got into crypto media full time. I joined The Block in February of last year, which seems like about 5 years ago, but it's like 11 months. Like, it's been a really crazy time, as I'm sure both Crystal and Danny can attest. It's been like one crazy news story after another. I knew it would be interesting covering this beat. It's what attracted it to me. But it's, you know, it's kind of beyond anyone could have expected. Just a series of huge news events and bankruptcies, tens of billions of dollars being lost. It's just been, you know, death by 1,000 cuts really for the industry. And it's been a great time, I suppose, to be a journalist, as much as a lot of people got hurt in all of those stories. My background, I guess I can talk about that for a few seconds. I am not, I guess, what you would call a crypto native. I am from a traditional financial media background. I spent about 10 years at Bloomberg. Then after a few years out at a startup, I joined The Block. So I'm definitely coming from that traditional finance space. I approach crypto as another branch of finance. I think crypto is like, it's like any other industry, and you know, it has its quirks, it has its difficult things to understand. I mean, if you're covering the aerospace industry, it's really complicated how that industry works. I mean, you know, understanding the fluid dynamics of how a plane flies is super complicated, but the average journalist doesn't get into all of that. You can still write a fantastic story without going into the actual mechanics of how it all works. I think there's definitely, all of that said, there's definitely some particular things about crypto that make it different to, say, an industry like finance or aerospace. There's some quirky characters out there. Definitely, it attracts weirdos and people with extreme personalities. And there's some scammers in there as well. Like I've been lied to my face more times in the past 11 months than in my previous career. PRs have straight out lied to me about things. Founders have lied to me about things. People are very vague about well, some people can be very vague about where they're based. Like you can lose a lot of friends at a crypto conference just casually asking people, hey, where are you from? Like that can people get sketchy about these kind of things. So there's definitely has its quirks. But in many ways, it's, you know, it's like any other industry. It has its personalities, has its power players, has its winners and losers. So yeah, that's my brief intro to me and how I see crypto.
Yeah, and I'm Danny Nelson. I'm an editor at CoinDesk. I've been working at CoinDesk since 2019. This continues to be my first and only job in journalism. I was at university before that, and it's been a crazy time just watching all the different turns that crypto has made since that time. Just seeing the different market cycles, reporting on who comes and goes, those power players, as Andrew pointed out, they change with the seasons, and some don't. Some just last forever and get stronger and scarier as you go. So I've really been fascinated with telling the story of crypto since I joined. And nowadays at CoinDesk, I am using more of those crypto specific tools to investigate and describe the space and the market movements and flow of money through exchanges and wallets. I really just enjoy digging deep and finding where the money's flowing and who's doing what. And especially in this last year of 2022, watching everything unravel through a mix of fraud and leverage and everything else has been fascinating. As as someone who's read a little bit about, you know, just financial fraud more generally, seeing how in crypto these sorts of things still happen, except on hyperdrive. If you're leveraged this much over here, well, in crypto, that's nothing. We'll go up 50x and see what happens. And watching these things explode and then implode, it's quite fun to write about.
I'm really excited to dig in with the two of y'all. As a reminder, for those just joining us, you can submit your questions at any time, no hand raising necessary. Just plug it into the chat box and we'll get to them later in the session. This is a no holds barred conversation, so feel free to put Andrew and Danny through the ringer. All right, so as we jump in, I think the thing that I wanted to start out with pointing out was the interconnectedness of crypto and how it cannot be overstated. Like late last year, I was surprised to find out that my ma is in it. Not in a major way or anything. She was just doing some estate planning and asked me and my brother if we knew how to work a ledger. Now, I don't own any tokens save for the $2 in USDC I earned from the Solana merch store at the Fancy People's Mall. So I ended up telling my editor and other leadership that there was potential conflict of interest in my ma's bags. Not a big deal, but still, as a journalist, you got to be careful. And y'all must be very familiar with that at this point, given your newsroom's respective associations. How do y'all deal?
Do you want to go first, Danny?
Sure. So there are two there are two questions in there that we could approach. One, the aspect of crypto holdings specifically, and the other of I guess the particulars of CoinDesk and the block. So we can start with the holdings, at least at CoinDesk. Our policy, or rather our perspective, is that there's a value in utilizing these currencies, or these tokens, I guess is better to say, in order to understand how DeFi exchanges work, how staking works, what does it mean to buy and trade an NFT. And so that doesn't mean that we're trading tokens. We are in fact allowed to, which is a notable difference from, let's say, if you're a business reporter and you're writing about Apple, well, you can't hold Apple stock. And indeed, at CoinDesk, we're not allowed to hold equities of companies that are involved in cryptocurrencies. However, we are allowed to own cryptos, and we have to disclose that publicly. We're also not allowed to trade for 30 days after a purchase, which basically means there's no trying to time the market, no day trading allowed. Anything over $1,000 has to be cleared with the company beforehand. But the fundamental idea there is that from the perspective of reporting on these things, because they become so complicated, we find that there is a pretty big usefulness, at least at the protocol reporting level, to engaging with these technologies. And so that's why at CoinDesk we have a set of rules around what we can and can't own, because these things at the end of the day are investments. Like what I was writing about Constitution DAO, which was an effort to raise money to buy, to crowdfund cryptocurrency in order to buy a copy of the US Constitution. And this project raised $47 million. I wrote about it in order just to understand it, and also because I thought it was funny. I gave $50. The project failed. And after it failed, the $50 worth of tokens that I had purchased went up to $800. So now you have a non-material amount of money that's become a material amount of money. So what do you do with that? Well, I actually haven't sold the tokens yet, but I do. And at that point, I just divorced myself from writing about it. But it is, I square the circle by making these types of holdings public. And also, at least I very much attempt to carry myself. I don't really care what the prices do. I'm not here to invest in these things. I'm just here to learn about them and to write about them.
Yeah, I mean, I guess the blocks approach is similar. I don't own any crypto like Crystal. I'd say probably 2/3 of the blocks newsroom doesn't own any crypto at all. We're allowed to, I suppose, by our own self-imposed rules. We have similar public disclosures on our website for the journalists who do choose to hold crypto. Those that do, again, they can't trade it. You can't, if you buy anything, you have to hold it for 30 days so that people aren't profiting on short-term bumps. And we encourage people to buy nominal amounts of tokens, similar to Danny was saying with the Constitution DAO. If you're reporting on a story, you might have to get involved with it, and you know, $50 or so, it's hard to see that as a conflict of interest, but it's just something that you have to do to get involved in the story. As Danny said, crypto being crypto, it's incredibly volatile. That could go to zero, or it can like 10 or 100x occasionally, and then you've got this issue of what you thought was just $50 trying something out is suddenly like, oh, this could look really bad, where, you know, maybe I'm conflicted here. So I guess there's nothing like that in the traditional finance world. But yeah, I don't know. I know we have got, as an industry, people do get stick for like, oh, you're all cheerleaders for this, you all want it to go up, you're all buying in, and then you're just like pumping what you're invested in. I mean, that's not my experience of certainly journalists at the block. Like, really, you know, it sounds bizarre, but we've really enjoyed covering the past year. Like, there's been loads to write about, and the fact that, you know, we're not personally invested and we haven't seen our own, like, you know, brokerage account balances going down every week is great. People outside the newsroom at the block are often more enthusiastic crypto fans. That's why they work at the block. But the block newsroom has its own slightly different culture, where I think we try and stand apart from all of that.
Two of the biggest stories last year had to do with DCG, which is the parent company of CoinDesk. That's Digital Currency Group, for those who don't follow all of the crypto acronyms. And also FTX, which there was a brush up between the block and FTX. And I wondered if y'all could take a moment to address that.
Yes,
sure.
Oh,
who wants to hot potato first?
I was going to grab that one and get it. So
you can go first.
Yeah, okay. So I can. So yes, I would say it's definitely better writing the news than being in the news. That is something that I'm sure hopefully everyone on this call can appreciate. Yes, we at the blog were in the news back in November, if I remember correctly, and start of December. December, and that was our CEO, a former CEO now, Mike McCaffrey, turned out when he bought out the original investors in the company through a management buyout in early 2020, he had taken $20 million plus in loans from Sam Bankman-Fried, the founder of FTX and Alameda, and he hadn't told anyone. And he, I guess, felt as FTX was collapsing in early November, he obviously realized that the writing was on the wall and he couldn't keep this secret forever, and confessed to the other senior leadership who are all a bit, whose jaws hit the floor. And then we didn't have any choice but to go out there and be public about it and kind of rip off the Band-Aid and said, like, hey, this thing happened. We had no idea. I mean, if it was some attempt by Sam Bankman-Fried to influence our coverage, it was very bizarre because, like, literally no one apart from our CEO even knew that this existed. And our CEO was obviously not in the newsroom and didn't have any decisions on coverage. So it was, we were all just sideswiped by this. It really sucks. Our CEO resigned. We have a new interim CEO. But yes, that's, that happened. We can acknowledge it. I don't know what else to say about it. We're hopefully finding a way to move on past it.
Danny?
Yeah. And as for CoinDesk and DCG, so CoinDesk, at least at the current moment, is owned by Digital Currency Group, which is, it's like the General Electric of crypto, perhaps the old time GE, more like, and which is to say that it owns a lot of companies that cover a lot of different aspects of the space. CoinDesk being a newspaper, basically. Other aspects: Genesis, a lender, crypto lender; Grayscale, the issuer of GBTC; a couple other lesser known companies, and then investments in like everyone. So CoinDesk, this is all to say, is owned by a company that has investments across crypto and wants crypto to succeed. But more pressingly for the newsroom is, how does one report on the parent company? Because you can't not report on the parent company, especially when the parent company's entities are going bankrupt. So we take great pains to make clear to people that in stories where we mention sister entities through the parent company, we say that they own us. But we also, in our day-to-day, we don't have any interactions with the parent company. We do talk to the sister companies when we're writing stories. So, we don't have a special phone line or something. We just send a press request like anyone else would. And that we operate completely independently. So we are not beholden to DCG, and we've written stories that put DCG, that highlight things that have not gone well. One of my biggest stories of last year was in the wake of the 3 Arrows Capital collapse. We were one of the earliest to report on the losses that Genesis had. So we really pride ourselves on being independent, and we also make sure that we disclose in the stories, especially now with Genesis. Sometimes we have to actually, I go back in like a Genesis story and I'm like, well, we forgot to put the DCG clause in there. So we police ourselves pretty well. And I guess that's just how it, like, that's how it's always been for me at CoinDesk, just because it's like that these were rules that were set up before I arrived. Going forward with, as has been widely reported now, the potential sale or prospective sale of CoinDesk, I don't have any insight into that, and I don't know who a buyer would be, but we're gonna continue to operate independently of the parent company, of the ownership group, through that process, I guess I would say.
Thank you both for addressing that. I know it's slightly uncomfortable, but as we dig in, what I was thinking about the 2022 threads that still need to be unwound, and how. I mean, there's FTX's bankruptcy, of course, but there's also the whole situation between DCG, Genesis, and Gemini. There's also Caitlin Long custodial suit against the Kansas City Fed. There's Grayscale suit, and there's Ripple's. What are some of the interesting threads that y'all are watching? And how do you hope to advance those stories?
I'll start on this one. Well, the biggest thread for me is the continued contagion of last year. There were so many implosions that affected so many players, going back to the earlier conversation, including my own, corporate universe, that the story hasn't yet finished shaking out. These bankruptcies are ongoing, and how the crypto world will restructure itself, and so how certain corporations will literally restructure themselves remains to be seen. So that's the big threat of 2022 that I'm looking at in the year ahead.
Yeah. So as I said earlier, the newsroom's kind of split into two at Block, and there's three teams that report into me on the pro side of things. We've got deals, we've got what we call crypto ecosystems, which is like the technology that underpins it all, that your layer ones, your layer twos, your scaling solutions, whatever, like the nerdy stuff. And then we've got the policy and regulation team. And, you know, if we go back to when I started the Block, the action was all in the deals team, right? It was like, yay, deals. And there was still crazy amounts of VC money splashing around, and every day there would be new rounds closing at various little crypto startups. But that has very much dried up at the moment. And so, and the busy team, you will be unsurprised to hear, is that policy and regulation team. So as both of you said, like what's going to be happening now is the fallout, is the hangover after the party. And it's regulators around the world are on the warpath. There's no doubt about it. And they feel they need to do something, and they don't move quickly, but they will be coming. And it may take, you know, maybe well into 2024 before things really come to a head on that front. But that's what it's all about now, I think, is in the near and medium term, it's the ongoing court cases and the bankruptcy cases, the criminal cases around some of these collapses, and the civil litigation. And then in the longer term, it's this drumbeat of regulation, and everything's gonna tighten up. Hopefully that will bring some clarity with it, and there's a silver lining for the industry, because it has operated in a big gray area for a while. But that's what we're chasing.
I definitely want to get into regulation and specifics, but before that, I wanted to go to the big picture. For me, I see a big sort of looming cloud overhead. And it points back to I think the original intent of the community, Big C, was to disrupt the traditional financial system. Only it would appear to me that those disruptors also very much need to be a part of that system, like the claims of being FDIC insured, for instance, or Binance is needing to find a new SWIFT partner, if that's any indication. And I wanted to ask y'all, if the traditional banking system starts to close its doors to crypto more intently, can crypto survive in that siloed space?
Andrew, would you like to start with this one?
Yeah, sure. Great. I mean, to be honest, maybe not. I mean, crypto is one of those things, like when you stand back and you say like, well, this is crypto, right? And it's a thing. And then when you get inside the bubble, you realize that it's not just crypto. It's like a dozen different groups of people, and they all hate each other, and they're all constantly like, you know, laying into each other. So I think some parts of what you could quote unquote call crypto, I guess around the Bitcoin ecosystem, like it genuinely doesn't need anyone's permission to work. That's the whole point. Like, so I guess on some level, that's not going away. As long as people believe that it has value, then it will have value. And it doesn't matter if traditional banks don't want to get involved. But the story of quote unquote crypto over the past few years has been much broader than Bitcoin. And it's, I guess the interest for someone like me is traditional financial institutions coming in, and startups coming in, and entrepreneurs coming in, and VCs coming in, and building stuff with this technology. And for that, I guess, startup ecosystem, the crypto startup ecosystem it does rely on banking, and it does rely on regulation and working within regulation. And if they are genuinely cut off from all of that, I can't see how they can survive. And maybe crypto does just collapse down to being something that is kind of a Bitcoin maxi vision of crypto, where it's just Bitcoin and nothing else again.
In order for, I think, for in my perspective, for crypto to achieve the scale that its boosters want, that some of its boosters want, and not all, I would say, do want this, but in order for it to grow to the point where it's actually making a measurable difference on a global, on a macro financial scale, it needs to have bridges, to borrow its own language. It needs to have rails into the traditional financial system, and so that money can come in. Otherwise, how are pension funds and these other institutional investors going to participate? And so that becomes extremely problematic when the providers of those rails, be it SWIFT or US banks or whomever, say, no, we don't want to do business with you. We can't do it because perhaps reputationally we don't want to take the risk. You see what happens to Silvergate, I believe. Silvergate took itself as a community bank, re-emerged as a bank that was willing to do business with crypto companies. It didn't have any of the token exposure of an FTX or of a crypto company. It was just managing the cash transactions, but still the fallout of last year has left it kind of crippled just because of its associations. It's not backing down, but it alone is not enough to provide for a whole industry. So I am certainly interested to see how it shakes out, and I do think that we're moving toward a world where there will be two parts of crypto: the DeFi, decentralized finance world, where people don't have to do things like KYC and follow Bank Secrecy Act regulations and other things that are demanded in the US, and the world of, you could say, permissioned. So permissionless over here and permissioned over there, permissioned where the companies know your name, who you are, where you live, and they are working with regulated partners if they are not themselves regulated, and those two worlds won't interact. In Europe, you're actually seeing this already take shape with some of the new rules that actually demand that wallets that are unhosted, which is to say a crypto wallet that you or I own and we just have our tokens in, but the wallet isn't associated with a bank. The European Union is saying we need to know what the name is on that wallet. So that's completely anathema to what those who really believe in DeFi are all about. And in order for them to continue in their world, they're going to basically have to have their own ecosystem that's fully separate from the regulated one. So that's the world I think we're headed toward.
That's definitely interesting. Speaking of regulation, do we see passage of any meaningful regulatory framework in the US this year?
I don't have any personal insight into that. I would just assume, based on the trends of how Congress works or doesn't, that we are in one of those moments where it doesn't. And so any monumental legislation, I think, is unlikely. However, just because of the spotlight that's come onto crypto, if there has been a time for legislation that's meaningful to pass, it's probably now, more so than at any other point, just because so many people have lost money. There's been so many hearings in the past Congress. There's more scrutiny from DC on crypto than there really ever has been before, and that might be enough to push something forward.
Yeah, I'd broadly echo everything Danny said. I mean, there was this bill moving through that seems to be picking up at least some bipartisan support, and now that's been tainted because that was very much pushed by Sam Bankman-Fried, who's now obviously totally persona non grata and awaiting trial for a massive fraud. So that's probably killed that bill off. And then, as you say, now we're in a split, house, and we will unlikely to get a lot of cooperation. So I don't know. It's unlikely, but as Danny said, there's definitely pressure for something. I would expect that you will see the regulators doing lots, but not a lot of movement on the legislative front, if I had to bet. But, you know, we will see.
Yeah, we will. So moving on into something maybe a little bit brighter, in terms of subject matter, I'm looking at emerging themes for the year. Stories you anticipate will dominate conversations. This morning, I was reading this Fortune story about California DMV putting car titles on the Tezos blockchain. And I wondered to myself, I wondered to myself whether if this is just a test or intended use. I don't know, but I feel like we're back to examining real world applications of blockchain circa 2018 and just like putting things on a digital ledger. And I wondered, is that the innovation we stand to see this year? Are there other things that you see out there that isn't loaded with hopium?
Look, here's the thing. Here's the thing, folks. I've been here since 2019. I've locked years off my life watching this crap blow up. When I started, we were in the world of what they call enterprise blockchain, where you're using what is basically a very inefficient system for managing records on a computer, for tracking Walmart lettuce from Nicaragua to San Francisco. Here, it's blockchain, in my opinion, a very strong opinion. Blockchain doesn't have a point for corporations or entities that need to have systems that other people shouldn't get into. If I'm the DMV, I don't have any business putting anything out into the public or having some system that relies on the public trust. I should just have my own record. And the California DMV has very bad records management. We don't need to get into that. There are some very funny stories. You should look up the Knoll case of the California DMV. But so in my perspective, because I will say, I fundamentally believe that this technology is both interesting, that's a rather bland point, but also has the potential to change how things work. I'm not necessarily rooting for that future, but I think that I get why the people who are building it think what they think. I don't see why the California DMV needs a blockchain for anything. They need their own systems. For the year ahead, I really hope we don't return to enterprise blockchain, because I think that that's sort of distraction and also marketing pointlessness.
Okay, but can you tell us something that you are excited about that is real?
Something that I'm excited about. I don't know. Dogecoin? No.
That strikes joy into your heart, Dogecoin.
No, definitely not. Dogecoin only drives further anguish into my heart. The thing that I guess I'm excited for there's a lot of, to get really in the weeds here, there's a lot of really cool things that are happening on Ethereum, which is the most popular blockchain, on top of which you can build financial products such as lending and borrowing and trading in a decentralized, which is to say no one has single control of it way. And I'm eager to see how people and developers make this technology, which, to go back to my earlier point, it's very inefficient and bad at what it does, but also very good at what it does in doing it in a decentralized way. How do they make it better? By building side rails that improve certain aspects on it. We call those layer twos, and all these technological things. So it's a very in-depth, like techie thing that I'm looking forward to, but that's where I'm paying some more attention this year.
Well, maybe you can walk us through what the Shanghai upgrade is and the meaningfulness behind it. I think the thread everyone wants to pick there is, the rate of unstaking, but I'm not sure if that's the thread to pull. What do you think?
So it's funny. This reminds me of a conversation we had before this panel started when I was on CNBC. I went on to talk about a very specific story that I wrote about JP Morgan. They ended up asking me about a very complicated upgrade on Ethereum, to which I had no full response. For the Shanghai upgrade, as far as I can tell, the biggest, the buzziest thing about it is it will be the first moment where people who have staked their cryptocurrency, which is to say, basically loaned it to server runners who run the servers that keep the network running, that you loan your crypto to them, and they use that as a collateral to do the computer work, and as a reward they get more crypto, which they give to you. So with the Shanghai upgrade, that will be the moment where people who have loaned their crypto to these, call them stakers, will get to unstake, reclaim their crypto for the first time. And that could mean a lot of ether, with the crypto that has been frozen, entering back into the system. That could have market implications. It has a lot of tech implications, but that's what people are most excited about with the Shanghai upgrade.
Andrew, do you have thoughts on that?
On Shanghai? No, I think Danny did it really well. I mean, that's you were wanting for something other than the unstaking, but I to be honest, I don't know if there is a theme apart from that. I mean, maybe it's too short-sighted. That's all that anyone wants to talk about. I'm sorry. Like, it's you will get a flood from the unstake. Well, maybe you won't. Maybe people will, despite the fact that you can unstake, maybe people will still be happy to leave it locked up there. But we will see. It will definitely change the market. In terms of like themes for 2023 that are interesting, going back a question. There's an interesting use case around zero knowledge that people are definitely getting excited around. Zero knowledge is a kind of branch of cryptography, which I guess is like the maths that sits at the heart of all of this crypto stuff. It's in the name, where you can do things like, I mean, the examples always given are, you can walk into a bar and prove that you're old enough to buy a drink without actually giving your precise age to the barman, or you can prove that you have sufficient funds to like take out a loan to buy something and that you're good for it, but without kind of necessarily sharing your entire personal wealth with whoever you're taking loan at, things like that. So that's a really interesting branch. To echo what Danny was saying, like people have been scraping for use cases for years. So like, will this actually take off? I mean, before I actually am a kind of a rare journalist, I suppose. I had 3.5 years out not being a journalist, kind of between my time at Bloomberg and my time at the Block, when I was actually like helping build a startup. And when you're building products, you kind of always step back and ask like, what's the user actually going to do? And like go out and put things in their hands and see what they do, and ask them to give you feedback on whatever you're trying out. And that's what I always come back to, is like, where's the user demand? Like, what, someone made an iPhone, it wasn't immediately obvious once the iPhone was invented that like, oh hey, having a camera and GPS and like a web browser all in one thing at the same time, that you can have Uber, like, but that wasn't immediately obvious. But there's been years now, 15 years basically of crypto in the broadest sense, and there's still not many hard things that people actually want to do out there in the real world beyond trading. But maybe that's all it is. Like, the financial industry is still a multi-trillion-dollar industry. Maybe it just stays within finance and it won't rub up against the real world in the ways that some people expect or have been pushing for years.
All right. Yeah, I also agree that ZK roll-up technology is interesting, especially as since privacy is very important to me, especially in hindsight, if we think about how big tech grew up, just not really paying attention to the rights of individuals. I think, privacy enhancing technology is promising. We are getting to the Q&A part of our panel. To start us off, I wanted to ask some fun questions for Andrew and Danny. I don't know what conferences I'm going to this year. Which ones are going to be the ones that are important to attend?
The most important one is the Consensus Conference, which you should use my referral code to sign up for in Austin, Texas, in April. No, well, I mean, I think that, but I'll like I say that because that's the CoinDesk conference, obviously. Well, I obviously say I'm obviously boosting my own conference, but we do have this conference that we do attempt to make it a big tent affair that brings in the biggest movers and shakers from all corners of crypto together to have big conversations. And so in that regard, it's a very good starter conference for those who want to get a big taste of a lot of different parts of this. Although from my conflicts there notwithstanding, I'm also very excited about ETH Denver, which is the developer conference that will be happening in Denver, as the name suggests, in early March, where I believe Vitalik, the founder of Ethereum, will be there. And it's going to be, I've been to too many crypto conferences, objectively, too many. ETH Denver is very cool because you get to hear from the developers who have many of them at ETH Denver are ideological, and they really believe in the philosophies of changing how systems work. And that's a really cool in the weeds discussion to sit in on.
Yeah, I imagine it'll be especially interesting given like the rash of layoffs and like how the ecosystem has been shaken. It would be interesting to hear from the folks who are on the back end who rarely get to be heard. There definitely some of my more interesting sources are on the developer side. What about you, Andrew? Where are you going this year?
But so right now I've got nothing in the diary for conferences in 2023, which is quite refreshing after doing, I don't know, 7 or 8 last year. So it's hard to tell. Like actually my colleague Lucy Harley McKeon, who's awesome, she wrote a story maybe a month ago going back and looking at this, because we're getting to the end of 2022. There's this like in joke within the crypto industry about how many conferences there are, and people will like hop between them. It's you'll go from Dubai to Miami to Paris and back to Dubai. It's crazy. We were looking ahead to 2023 and looking at this industry that is in many ways on the ropes and saying like, they can't be holding as many conferences in 2023 as they did last year, surely. Like, and so we just started calling around everyone and asking like, hey, you gonna run next year? And basically everyone is like, no one's really taken the plunge and cancelled yet. I mean, maybe there'll be some kind of more last minute cancellations as we go through the year, but everyone seems to be going ahead. I imagine there'll be slightly less lavish in 2023, but who's actually going to be at them? I'm curious. Like, there's been layoffs, like you said. Like, surely these conference halls will be a little bit emptier than they have been. That said, the one I would love to go to again, because it was my favorite of last year, was Paris Blockchain Week, just because it was a manageable size and there was some big people there. Kind of everyone was there that you wanted to be there, but it wasn't like a 25-minute walk between different appointments like some of the big ones like Bitcoin Miami can be.
There's also go on.
Oh, sorry. On that point of like who's going to show up, I have perspective into that actually. Like for Consensus, we're cognizant of that fact. It's going to be a smaller affair than last year because we just don't expect there to be nearly as much interest in going to these $1,000 conferences. Like when we go to conferences, it's free. Like our travel's paid for, but more importantly, the ticket is comped because it's a press ticket. But if you're just a person on the street, you're really going to pay $1,500 to hear the Winklevi speak. Oh my goodness, you can do that for free online. What are you thinking? So we are paring it down because there's less money and there's also just less interest and less appetite for these celebrations.
I did want to take a question from the audience, and I see a good one from a Nancy Brenner. What are the boldest mistruths CEOs or spokespeople have told thus far? What extra steps do you take to verify your intel in this volatile situation? I can go first, I think. The weirdest thing that happened to me in terms of, it's not like a lie, say, but I was interviewing the CEO, and I was trying to get a scoop, and I asked a very pointed question. It was sort of like, it's like, what is the answer to this question? And this person hung up on me, tweeted the answer, and then called me back an hour later after multiple media publications had scooped me. And I was so mad. But, you know, I didn't send a nasty email, or I drafted one, but then I was like, nah, not worth it, whatever. And the second thing that comes to mind in terms of like mistruths is that early on, I was training some folks who were new to crypto, and a very young reporter came with what she thought was a scoop. It was all in a press release, and the communications person had sort of delivered this scoop to her. But after calling around to the other associated parties in the press release, it became very obvious that it was not, the scoop was not very scoopy. It was almost non-news. And we had to sort of rehab the story to make it workable. And that was like the most bizarre thing that I encountered, I guess, early on, just because I thought it's a press release. Like how, you know, it's just, you expect press releases to be correct, but, you know, do y'all have stories?
I mean, I've definitely come across press releases where startups will say like, hey, we've got a great new initiative with some giant blue chip company like Nike or Coca-Cola or someone. And then you try and get hold of the big blue chip company to confirm, and they're like, what are you talking about? This is no. They're like, so you have to have your wits about you. I mean, we've also had like fundraising type stories, you know, startups raising money, you know, from venture capital, where we have amazing sources, 3, 4, 5 sources telling us that something is happening. We have term sheets, like actual documents that this startup has sent out to potential, and you know, these startups are sent out to potential investors pitching for money. Like, we know it's happening. It's as solid sourcing as you could ever get on something like this. And then you ask the company for comment, and the CEO will say, no, it's totally untrue. If you write that, I'll call it fake news. So having had that happen several times, we've now just gone ahead and publish them anyway, and put the CEO's comments in there, which is kind of astounding that they just go and be like, yeah, the CEO said that they would call this story fake news if we wrote it, but it's true. So here you go. And like, that's bizarre. And coming from, there's no real consequences for them in a way. Like, you know, at Bloomberg, you're generally talking about, you're covering public companies in the most part, and there is consequences if the CEO goes on the record, which is with something that's basically a lie. So anyway, it's a bizarre world sometimes in crypto.
Do you guys have like tips for meditating on like how to get the anger out? No.
I mean, drafting the angrygram and not sending it is the time-tested one. I have on occasion sent it, and you know what? It feels even better that way. But it's what you do.
Send it to me instead.
Yeah,
so like,
no, because then you're gonna scoop me. No, I'm not gonna do that. Just the interactions with PR people could get interesting. Just a couple days ago, I'm not gonna name any names, but there was a story about a company that was raising money. I hadn't written the story, but I was acting as, I guess, a go-between on this, between the press, or the press person had decided that I was the person to reach out to. I said, look, you don't like how we presented this thing in the story. This is just go talk to my superior about it. I'm not involved, but we think we did the right thing. And the PR person said, you know, it's shocking to me that CoinDesk would act this way in a story about company X, which is in an advertising partner, or like which has a business relationship because they buy ads on the site. And at that one, I was like, I lost it. And I responded to the press person. I said, you know, I was willing to listen to you, but I told you to talk to my editor, and 2, I'm not going to stand for you making veiled threats or insinuations that we are beholden to to write about a company in a certain way because we have an ad relationship with them. That's like, that part of the business is completely separate from ours. My role in this conversation is over. And that was the end. That was the end of that. And that person is now not going to be hearing from me again. So you know what? When people push, if they're pushing too hard, then and then calling into question integrity, or rather setting up a situation where one's integrity would be tested, then I'm not going to stand for that.
We are almost out of time, so please submit your questions into the chat if you have them. Here's another one from Marilyn GWAX. So many bad things happened in the cryptocurrency world in the past year, but none of it had major impacts on the traditional, or I guess on the US economy. Did that surprise you? Did that show that crypto trading is actually sort of meaningless and absurd?
I think it's a matter of scale. Like it's a matter of scale and inflated numbers, so that there you get into leverage. Now in the financial system, leverage can blow up. If anyone has read When Genius Failed, which is about long-term capital management, will know that a single hedge fund, which is 16 or 20 or 30x levered in emerging market debt bonds, that could have real ramifications for the economy if it blows up. In the case of long term in the 90s, the New York Fed had to step in and organize a bailout. In crypto too, some of these big blowups are the results of leverage and borrowing money to make heavier bets, have more exposure. And you know, what goes up must come down, and when it goes up hard, it comes down even harder. So the reason though that all these blowups haven't had an actual economic impact is because the money that's being played with is a large part of it is the crypto crowd's money. So the crypto crowd had $10, then it became $1,000, and then they lost $1,000. Well, if they lost 1,000 that used to be 10, that's sort of still over there. It's not really a contagion worthy. Then you have some pensions that have lost money, but they only ever put a fraction of a percent into crypto. So you know, there was risk in investing. They lost all their money of that very small investment, and so there's no real ramifications. So the blowups not spilling over didn't really surprise me, and it does in a way show that on the macro scale that crypto trading is I wouldn't say meaningless, but inconsequential. I would agree that crypto trading is absurd, but not necessarily for the reasons that you're putting forward here.
Andrew?
Yeah, crypto is tiny. Like, it's tiny. $1 trillion. There's nothing. That's all it comes down to. Like, the whole thing could go to zero tomorrow and the global economy would not notice. But that said, like, the most recent crisis of the many that we've had in the past year has been the most painful because it was FTX blowing up and closing its doors, and there's, you know, well over 1 million actual people, retail investors, traders, who have money locked up on that now that they can't get access to, and maybe at some point down the line they'll get an amount of it back, some cents on the dollar in, you know, 5, 6, 7 years when it's all gone through bankruptcy or whatever. But for them it's incredibly painful, and I'm sure we've all read the individual stories of people who thought that this was, you know, close to a FDIC insured bank account, and then found out that it really wasn't. So yeah, as much as it's not affecting the US economy or the global economy, there's a large number of actual people who've had their lives seriously affected.
I will take the last question. I like to do a take it to the bank question, you know, something that you can take away from the thing and actually apply it to your real life. And I wanted to ask that question. I think, Danny, you talked about AI uses for crypto reporters. I've only begun to feed, you know, tidbits of securities law to ChatGPT just to have questions about what constitutes a security and what's not, with a very logical thing. how do you guys think about AI tools for crypto reporters? And have y'all used anything that's worthwhile that folks can start doing today?
So we've written a story that the whole story was just about an experience of using ChatGPT. We've also played around with, not for publication in our pages, but just playing around with what happens if you ask ChatGPT to explain a really complicated topic to a fifth grader. So, you know, dumb it down for an audience. And the answers are sometimes good, sometimes bad, but certainly not at a point where we would trust it to take the reins. For my own personal processes, I've started using DALL-E, which is the image generator, to create visuals for my articles. So there's less factual stakes at hand, at play, and you can get some. I have a story coming out later today about a decentralized exchange called Mango Markets and the SEC. So I have this beautiful piece of art that DALL-E's created of like a federal regulator looking at a mango with a magnifying glass. So that's how I use AI to create pictures that help.
Who has the copyright then? Do they own the copyright?
We have I don't know. The short answer is I'm trusting the photo editor on this, because he said that it was okay for me to do. But
I'm sure it is if you credit them.
We definitely take it into consideration. So with what I don't personally know, but the person who I spoke to was like, yes, it's okay to do this, because we don't want to be sued. We want to write about the lawsuits.
I mean, I was experimenting today, but partly because you mentioned this yesterday, Crystal, like how we're using it, and we haven't really been using ChatGPT or anything up to now. I had a play around this morning, asked ChatGPT to summarize a few like articles in other publications that we were going to be summarizing for our own service, and it generally didn't work. Like, I mean, partly the reason is that they're kind of, you say, hey, please summarize this URL and put the URL in. A lot of the times it's a paywalled URL and then it just doesn't really know what to do, or it seemed to grab the wrong article and summarize an entirely different article. Or like it would, when it did work, it would summarize in a very basic way. Like the facts would kind of be there and it would be shorter, but what you're really wanting is someone to like be able to scan a 500-word article and pick out like the 2 sentences that are really, really important. And it just doesn't have the industry knowledge at the moment. Like it has the kind of linguistic skill in a way, but it doesn't have the industry knowledge to say like, well, this is what's really important, and that I know that people who watch this industry want to know. So I think it could come, like, but almost certainly if you think about where it is now versus like even a year ago, I think it could come, but it needs training, I guess. Like I think what you would imagine is that you know, I ask it to summarize this article and then it does a terrible job, and I say, well, this is how I would have summarized it, bam, bam, and then that's a data point, right? And then you just get every journalist in your organization to do that, and not maybe after a couple of years, it's really very good at it. So I don't know, I think that's a use case. At Bloomberg, I was involved in the early stages of like using computers to extract the numbers out of releases. That's hugely powerful, and that's how Bloomberg does basically all of its earnings coverage now, because it can do it in milliseconds. You had to train it. That's all it comes down to, is like giving it enough cases to train, and then it will be good. So for now, it's just a bit generic.
Well, sounds like our jobs are safe for now, but also
a few more months.
Yeah. But like cool things to experiment with. Thank you both so much for this conversation, Danny and Andrew, and for the folks involved in organizing this. Be sure to check out sabu.org for information on future events. Thank you all.
Thank you.